Hello everybody and welcome to this in the first of a special series of podcasts discussing Cox Automotive and Grant Thornton's Insight Report 2023-2024. I'm Philip Nothard, Insight Director at Cox Automotive, and I'm delighted to be joined today by Owen Edwards, Head of Downstream Automotive at Grant Thornton.
Hi, good to be here.
Hi Owen, thank you for joining us. In this series we'll be discussing topics and headlines found in this year's report, which you can now find on the Cox Automotive website. We'll be tackling the section, the report at a time, starting with today's podcast, which will be focused on the future of automotive retail. So Owen, let's think about the changing face of retail, and there's legislation changing the impact of automotive retail. I mean, we talk about this a lot of the time, but what does that really mean for the manufacturers and the dealers, and what are they facing now going forward with all this legislative change that's coming?
Yeah, so you're right, actually, Phil. There is a lot of change taking place, and clearly, we've just recently seen some of that with the UK government a couple of weeks ago. With that move from 2030 to 2035, in the way of diesel and petrol engines now being able to be sold right to 2035. But of course, don't forget, you've also got the other issues that are coming up, which is the rules of origin, which is something that's been brought on from Brexit and what's happened around in Brexit, which was 2016. So we're still, we're still living through that and going through in 2021 when it formally came into place. So what we're seeing there really is that as time goes on from 2024, we'll start to see a much more stricter and harsher level of cars coming imported into the UK and Europe, of course, as well. And so therefore, what will happen with that aspect is you'll start to see now more and more sort of tariffs applied onto those cars that are clearly not fitting that 45% of non.
And I mean, that's the thing, isn't it? I mean, we this is at the minute as we speak in 2024. Rules of origin comes in.
Correct.
10% tariffs on imported goods into the UK, which could impact, if there isn't a trade agreement with the supplying country, then we get the 10% tariff on those vehicles.
Exactly.
So it starts to change the dynamic for one, the manufacturers where they place their products, and two, the dealers in terms of pricing that product, depending on the manufacturer and the competitors in that space is going to be one of the risks with that. And I mean, in addition to that, we talk about this in the global supply chain and that marketplace, but how is this now starting to drive the supply chain of battery electric vehicles, specifically around the rules of origin?
Yeah, so around the rules of origin, at the current moment in time, you'll have a little bit of a leeway with battery technology for obvious reasons. Most batteries come from China. So at the current moment in time, it won't be the 45% that you see on a BEV. It will be a lower level to start with, and then it will increase over time to 2027. Now, the issue around that is that you will still see those batteries coming in, but of course, the big question mark is, as you said earlier, is there going to be 10% put on those tariffs of those vehicles that do have battery electric vehicles, because they are not, they're not manufactured either in Europe or in the UK. So there is a bit of a concern there around that, and that would have effect on price with the dealers as well.
I mean, clearly, the automotive does face significant challenges in complying with this evolving legislative requirements, and especially when it comes to battery electric vehicles, don't they? So what about we talk about, people hear about the ZEV mandate, and they hear about the CAFE, which we've talked about within the report, and the ZEV mandate is the zero emission vehicle mandate, and we talk about the CAFE, which is the corporate average fuel economy standard, which is more for the US than it is necessarily for the UK, but does have an impact on manufacturers. Where is that now? Because the ZEV mandate, as you touched on earlier, the ZEV mandate is still in play, irrelevant of the 2030 and 2035 deadline, which we know can still change.
Yeah, exactly.
But the ZEV mandate remains
still fixed.
In place. It's still fixed.
It's still fixed.
20% for UK in 2024 for cars, 10% for LCV. That scales up to 80% for cars in 2030 and 70% for LCV in 2030.
And then 2035 you're zero.
And then by 2035, currently it goes down to zero. So
yeah.
How is that now, particularly thinking, again, manufacturers and dealers, how they are handling that as they walk into 2024?
Yeah, so walking into 2024, I mean, for some of the manufacturers, clearly it'll be a bit of a rude awakening. 22% of the ZEV percentage mandate that you've got to have of vehicles that are BEV, Clearly, some brands will not have that because they're focused on internal combustion engines, but also as well, they've done hybrids. And then at a later date, what will happen is they will then bring their BEVs in. So at that particular point, they will then gain the full benefit. However, what there is a certain amount of flexibility that is not known to all. It's really, and you've got to look in the detail of the document, and that sort of stipulates that there is allowances within that. So let's say, for example, the first year, 2024, you get 2022, but you get 20% of your BEVs as a market share of what you've got. Now, the situation there is what you can do is you can have an allowance of up to 75% of that 25%, where basically you purchase this allowance and it enables you to be flexible. So what that does, or what the government's then done, is they've allowed that ability to have some manufacturers sort of borrow these allowances between 2024 and 2026, making it flexible. So that will help both the dealers and will also help both the manufacturers, because the manufacturers can now borrow that bit, and therefore they don't have to put so many BEVs into the market, and that enables them to be flexible. So still retaining some of the internal combustion engines, still retaining some of the hybrids, which will then give them the opportunity to sell them into the market. Clearly by 2030, that's more significant because you're now 80% of cars, and then 2035, naturally you're out your BEVs. You're out BEVs. So.
And thinking about this from a global manufacturer perspective, you know, the manufacturers that are supplying into the US, they've also got the CAFE.
Correct.
To fight against and to understand and to manage as well. So, you know, when we're talking about global manufacturers that are going into Europe, UK, and into some of the US markets, you know, does this start to change the dealer landscape? You know, we're talking about the dealer landscape. This is about supply of new vehicles coming out of the manufacturing space, depending on where those manufacturers operate and where those vehicles go.
At the end of the day, yes, because I'm sure that everybody would continue to continue to manufacture internal combustion engines, so the dealers would sell internal combustion engines. However, because of legislation which is being pushed strongly through, you know, Standard 6 in China, as you say, CAF in the US, ZEV mandate in the UK, and Fit for 55 also as well in Europe, the scenario is that you're now starting to see those BEVs being pushed into the market, i.e. they've got to be put, otherwise they get fined, they get severely fined, the manufacturers. Now, of course, what effect does that have onto the dealers? Well, the dealers have to have the infrastructure in to do that, they have to have the training in to do that, to sell these BEVs, both for new and for used vehicles as well. So inevitably there is that step change that the dealers have to go through as well as the manufacturers, but it is really moved on by the manufacturers being pushed by legislation.
So really, as we're walking into 2024 and beyond, you know, the automotive sector, you know, we are facing global pressures. It's not just the UK, it's not just the EU. There is, you know, pressures across some of the international and US markets as well. And the manufacturers have got to sort of change their strategies, flex their strategies to do that. And just finally, I mean, you know, in the middle of all this, we've also got what we call in the omni-channel, and we may call it you know, just it's retail in today's marketplace, but you know, it's affecting automotive retail, especially when it comes to promotion of the sale of battery electric vehicles or EVs. You know, we're talking about the omni-channel represents an integral part of the approach from automotive retail, you know, blending that physical dealership into the virtual website space, and you know, through the social media and through apps on phones, etc. I mean, how is this now starting to emerge as we go into sort of 2024 and beyond?
So I think that becomes more of a prominent scenario. And we thought anyway, automatically the omni-sales channel would become more prominent, both for the sale of new, used, and service as well. Because I think what we've started to see is since COVID really, and that was a sort of a catalyst where there was lockdowns, there was that requirement to sell online. But now the ability to sell online and offline, and now for the consumer to be the central entity of that. Now, clearly, you need to have the IT sophistication to do it. You need to have the staff that can do it. You need to have the ability to do it. But that increasingly is going to become more and more. Is everybody going to go along and say, I want to do everything online? The answer is no. It's unlikely that we'd have 100% online. What is more likely is we will have a percentage that would increase over time. As you know, as more and more people become more familiar with buying online, for example. But you still have to give the consumer that opportunity to come on and offline.
And I mean, with this, I mean, we're talking about the onset of BEVs being the more dominant fuel type.
Yeah.
We know at the minute there are challenges into the adoption, particularly in the private sector, either new or used. And thinking about how does that omni-channel, we talk a lot about high quality websites, we talk about multimedia approach and content, we talk about online tools, and that efficient and effective omni-channel strategies that should go alongside that EV, that battery electric vehicle, to make sure that the retailers and the OEMs, the manufacturers, are educating the buyer.
Correct.
In both the virtual and the physical space, using that omni-channel approach going forward.
Yes, at the end of the day, it has to be a seamless approach. If it's not a seamless approach, then the system breaks down. Yeah, and when the system breaks down, that's when customer service is affected, and when customer service is affected, that's when your customer leaves you. So fundamentally, you have to have the technology that backs that up to have the ability to track that customer going on and off. So i.e. the ability to buy online, if they want to truly buy 100% online, or get their car serviced 100% online, just dropping it off. Or the scenario is they want to go into an outlet and a dealer or a handover facility, whichever way it may be. So you still need to have both aspects, heavy asset software to do it online, but at the same time, the both of them have to come together in a really slick, seamless process. If not, then you have a problem.
I mean, so clearly, the takeaway from this is, the retailers, and I say retailers, whether that is in the agency space under the manufacturer or whether it is the dealer themselves doing it, they really need to adopt that omni-channel approach.
Correct.
It's vital for the business, for the retailers now to do this, particularly around this transition to the battery electric vehicle marketplace, to make sure that the consumers, the people looking online are fully educated. Yeah, it is as you say, that seamless link between that physical and virtual space, so that the consumer can do elements of the process online. They are educated online. They get all the information they require. That then, when they turn into the physical environment, there isn't the repeat of that same process again. It's all done in that online environment.
Yeah, and it is very technical, because one, you are going online, which is not that everybody's happy with that situation from the dealer aspect. There will be some that are more efficient, more effective than others, but at the same time, you're now trying to explain something that is even more technical, i.e. battery electric vehicles. What's the capacity, what's the range, what's the price, what's the range anxiety, where can I charge it, can I charge it at home, all these sort of factors. And then in turn, that gives you another question mark, which is how do you do that for used vehicles as well? Because that's even more difficult for the dealer to deal with that, because they're not just dealing with their own brand, they're dealing with numerous other brands, different types of battery technology. So fundamentally, as we said before, it's got to be smooth. It has to be that smooth process.
And I mean, just to finish off there, we're talking about that changing face of retail as we go into 2024 and beyond. And we've not even touched everything in this chat. I mean, there's a lot for the dealers and the manufacturers to get ahead around going forward. A lot of change, and the landscape is changing. They need to understand what is happening, why it's happening, and essentially how it's going to impact them going forward. So the future of automotive retail, we can't talk about that without touching on used vehicle marketplace and what's happened to it. We know that the recent disruptions impacted the automotive industry, and let's talk about what impact that has had and what it means for the future of retail. We know that we went into a 3-year challenge of supply. Out of that 3-year period of COVID-19, not just COVID-19, because supply chain semiconductors was the headline act in terms of the media. We lost 42 million vehicles out of that production market over 3 years compared to previous 3 years. What has that done now, do you think, Owen, in terms of the future landscape in that used vehicle marketplace, used vehicle park, not just in the UK, all markets? This has impacted the global used vehicle marketplace.
Yeah, so I suppose the situation, as you said, with any supply chain issue that you have with new vehicles, that's clearly going to trickle through to the used vehicles, because not always, but you generally have a part exchange, and then that part exchange goes into the market. So immediately you're going to have that 0 to 3 issue there of a lack of vehicles. Yeah, and what we've slowly sort of seen with the dealers is they've sort of shifted, not just dealers, but used car supermarkets as well, and some of the other independents. They've shifted away from that, where there is a lack of supply, which is 0 to 3, and they've moved from 3 to 5, 5 to 7. So they've sort of pushed that out towards the latter end. I mean, what we still know is that there's still 30% of the market that's just private, and the dealers won't get involved in, and the big independents won't get involved in. But fundamentally, that has had that shift in age profile. So the profile has changed. Yeah.
And we know through those shortages, we know that at the same time that people move from the new vehicle market because of long lead times or lack of availability, moved into the used vehicle market at the same time as many consumers had more money to spend because they weren't out going on holiday, they weren't having that lifestyle spending, they were spending it on cars. And we saw that, the UK increased 30% in used vehicle values, US increased 40%, Europe similar between 30 and 40% in terms of used vehicle prices. That has kind of sustained today. It's still in the market in terms of having an influence in that used vehicle market, but at the same time, the choice of vehicles coming into the 0 to 12, 0 to 24, 0 to 36 and onwards is having a continual impact as we move through time away from the COVID lockdowns.
Yeah, and we're starting to slowly see that. We're starting to slowly see that, the new vehicles are coming back. Now that, again, like you said, will trickle back into the used car market. But what it has done at the moment, because demand at the moment, if we look back over the last couple of months, still remains reasonably robust. That may weaken going forward with raising interest rates, etc. But the scenario is at the moment that those prices still remaining high, and there is the opportunity with the shortage of used vehicles, as we've already discussed, and as I say, the new's got to trickle through to the used, that might stay for some time. In the end, clearly our belief is that, there is a likelihood that they will weaken over time. We are seeing little bits of weakening here and there. And of course, the other area that we're seeing weakening as well is in the battery electric vehicles, which is a different catalyst, but it's weakening much more in that than it is in the internal combustion engine.
And I mean, even used vehicle transactions, whatever market you look at, in 2023, we're still expecting the market to be below pre-pandemic levels.
Absolutely.
We're talking in the report about the 2024 forecast and beyond. Things are changing now permanently. The landscape has changed. The impact of the lockdown, the pandemic has significantly changed the future landscape of the used vehicle market, and we're never going to return to that. I think this is the perception that's out in the marketplace, that we're never going back to what we were used to in a pre-pandemic space.
I agree, and I think just very quickly on the dealers, I think the scenario with them is the gross margins that they've been getting from the used cars has been, talking about the finance side of things, the gross margins has been pretty good. They've done well out of the back of it. Not just the dealers, also the used car supermarkets. They've benefited from that as well. So there has been some good times. Things may change going forward. We just don't know at the moment, depending on which direction and the level of demand and supply takes place. But fundamentally, it has been very good for the industry as a whole.
So clearly, the impact is the sector has changed, the landscape has changed for the used vehicle park going forward permanently. The type of vehicles, the age profile, the mileage profiles of these vehicles in the used vehicle park have been permanently impacted going forward. So let's think about, what do the dealers, what sort of systems, what should they start to adapt to these changes, in terms of thinking about shifting stock profiles, shifting sourcing methods. We know that through the pandemic, when there was a shortage of new cars and there was a shortage therefore of used vehicles, immediately we saw an increase in age profiles, we saw an increase in mileage profiles, we saw OEMs come into the market that increased their approved vehicle schemes. Some of them went from 60,000 miles to 80,000 miles limit that sit within the approved scheme. They went from 6 years to 8 years, and even some went out to 10 years that you could sit within that approved scheme. And we saw this impact that you had this shift of franchise dealers then moving into the independent dealer marketplace because they were keeping stock that they would normally send to wholesale and trade. You had supermarkets that suddenly moved into both the franchise space and the independent space. The market shifted. I mean, do you think this is now going to be permanent? Do you think the retailers have changed their thinking towards how they source products, how they dispose of products, and the type of vehicles they retail?
So I think the situation is sourcing is the most important part, right? So you've got to get your sourcing right. You've got to get the right vehicles, the right shape, the right size, the right colour for your area, for your aspect, for what sells well for you. Okay, so are they going to naturally stay at 5 to 7? No, they won't. They will shift. They will shift around. They will evolve with the market. We know that because we know that there's probably going to be more 0 to 3s coming through at some point. Okay, when the new vehicles trickle through to that. But again, it's still very much the point around get your sourcing correct. Yeah, ensure that your remarketing is correct and your logistics is correct, so that your stock turn on your vehicles is at where it could be at its absolute optimum. And then once you do that, you take that into the sales, and as we discussed in one of our other ones, which is the omni sales channel, you've got that smooth and effective as well.
So clearly, retailers, dealers really need to adapt to the new changes, the new way of sourcing stock, the new way of disposing of stock, whether that's in the virtual or physical space. They still need to change that. So, I mean, let's think about the digital landscape. You know, we touched on it a little bit earlier in terms of the omni-channel. We're talking about the used vehicle marketplace and this role of physical sourcing versus virtual sourcing of vehicles. You know, we've seen this past 3 years that, you know, retailers turn to digital sourcing for their forecourts, away from that physical. We've seen a bit of a return to that physical space now because, you know, as I said earlier, we've got older vehicles, higher mileage vehicles now entering to the wholesale channel, and therefore the demand is there that they want to see, touch and feel those vehicles in the flesh rather than buying those vehicles online. Do you think this is now going to be a permanent factor that will play into that used vehicle?
I think you're going to have both. You're going to have your online and you're going to have your offline, i.e. physical. But fundamentally, you know, the dealer is going to need to source their vehicles where they want to source them. You know, some will prefer to do it online. Others will prefer to, as we say, kick the tyres. So I think there's a position for both of these to have in the market.
So we know then, you know, that dealers are now increasingly using digital sourcing to acquire their used vehicles, but physical still plays a significant part in that process. And I mean, manufacturers, so how are manufacturers now, you know, getting involved with that used vehicle marketplace? You know, we talk about the challenges that they may face in this transition around, you know, we talk about things like Spotty Car, that now operate under the Stellantis brand, that is now a branded, classified used vehicle marketplace for the retailers under the Stellantis parent company. That's UK, Europe, and now they've entered the US market. Where are manufacturers now starting to think around this used vehicle market landscape going forward?
Well, I think fundamentally, if the manufacturer gets more heavily involved in the used vehicles, they have a better understanding where those used vehicles are going. So at the current moment in time, you sell the used vehicle, it disappears, it goes through to the dealer out into the wider world. And then that is rotated however many times the vehicle is sold and brought back in and sold again. But fundamentally, if the OEM can then become part of that, i.e. they can take more of a controlling stake in that, as Spotty Car is doing with its dealers. So it's still using its franchise dealer network to do that, which is great. But at the same time, if you look at Stellantis, they've got Artemis, which is also as well used car supermarkets that are also going down that route as well, physical assets as well that are separate to the dealers. I think they've got that benefit or the opportunity to upsell the finance again, which they should be doing. And then secondly, don't forget, all those vehicles, sooner or later you're either going to have to remarket them, or you're going to have to do repairs on them, or you're going to have an MOT on them. And with that comes the parts, and therefore that gives the opportunity of genuine or non-genuine OEM parts to be sold into that market as well, adding more value.
So you know, clearly the manufacturers, the OEMs have a clear strategy of entering that used vehicle marketplace in one form or another, however they do that. Right. And you know, that's where now some of them may face significant challenge in terms of the complexities, because new vehicles is fairly simple compared to used vehicles. You're dealing with used vehicles, you're dealing with subjectivity of a condition of a used vehicle, the price of a used vehicle. So they're going to, you know, they're entering that space, but clearly they're going to have that, you know, that dynamic between the retailer's expertise and where the OEM wants to enter that space.
Yeah.
Well, just thinking about, you know, what strategies the dealers need to think about, you know, and adopt in this evolving used vehicle marketplace in the future. You know, we talk about omni-channel, we talk about a drop in stock profile of, you know, production changes, change of fuel types. You know, the retailers, the dealers really need to adopt some strategies now going forward as to, what kind of stock they're going to hold, where they're going to source it, where they're going to dispose of it, and how they're going to manage their stock profiles.
Yeah, and so they've got a reasonable choice to do that. So some of it will be through the auctions, some of it will be on online auctions, offline auctions, or physical auctions. You've then got the situation where some of it will be driven by what the manufacturer is also doing and how they're developing their strategy. So I think the dealer has got a lot of opportunity there, both to do it the way they want to do it, but at the same time go hand in hand with the OEM. So fundamentally, what you have in the breakdown of the market is broadly 1/3 is private of the 7.1 million units, broadly a third is by the manufacturers and dealer network, and then you've got a remaining third, which is the leasing companies and auctions, etc. So if you have that split, and it generally has historically remained somewhere around a third, you can see that the dealers are starting to evolve and starting to develop, and they're developing it by themselves, but also developing it with the OEMs.
And I mean, we can't ignore what we've been talking about, battery electric vehicles.
Yep.
That not only just coming into the new vehicle market, they're coming into the used vehicle market, and therefore the aftermarket. And that requires significant investment in terms of that aftermarket, the servicing, tyres, repairs, etc., that come along with that battery electric vehicle marketplace. So, there's a significant shift and a significant investment coming as the retail dealer network starts to transition to not only whether it's an agency model, standard franchise agreement model, independent supermarket. Battery electric vehicles are going to continue to play a significant part of that used vehicle profile and requires investment.
Yeah, absolutely. I mean, it requires investment on a number of reasons. One is the technology of the vehicle is getting greater. Secondly, you need to have a health and safety inputted into this, and the investment is really around the training. And if you look at the IMI, they're actually doing a series of certified training courses that go around that. Now that's clearly a really positive for the industry, and at the current moment in time, because of the low level and number of battery electric vehicles we've got, there's probably more technicians are needed than required at the moment. However, going down the line, that won't be the case as the underlying battery electric vehicle market rises substantially. We need to keep those people being trained, and we need to keep that health and safety in. So we need to be really mindful as we move forward and progress down the BEV route, both for new and for used vehicles, that those people are being trained, that the positions of health and safety are being implemented, and that the dealers are adapting to that, both in the after sales and also the used vehicles, because they might not just be selling their own product, the used battery electric vehicles, they could be selling others, and of course the new sales as well. So it's really quite a rapid changing market.
So therefore, really, what we're talking about is those successful dealers are going to be the ones that are evolving to the new market landscape. They're focusing on efficient operation systems. They're facing on, they're open to adaptability. They're looking at embracing those changes in terms of, we talk about that consumer behaviour, consumer appetite towards the marketplace, and willing to sort of get involved with the new battery electric vehicle market and invest, educate, and learn around that marketplace.
Yeah, and they've got to, because it's everything. It's everything that's basically around that vehicle that's completely different to internal combustion engine. Another area we can mention is the infrastructure, for example, in the dealer networks. You're going to start to see many of these vehicles coming through. You're going to have to upgrade your dealer network sooner or later for the infrastructure. So, it is such a moving market. It's such a moving feast, and things are happening so quickly. And the battery technology, which we're going to discuss in the Insight document, is also changing as well. All of that needs to be considered when you're developing these things. Yes, we can talk about just purely the dealer, but what we should be looking is the whole supply chain and the whole of the distribution and the whole of the dealer network. It's a combination of everything.
Well, Owen, we can't talk about the future of automotive retail without touching on agency model, right? So, first of all, how is the role of automotive dealers changing? As we talk about and this shift towards agency model, is it inevitable that the majority, if not all, the manufacturers will eventually shift to agency? Or are we already starting to see more of a hybrid between franchise agreement contracts and new world agency model as OEMs start to realise that actually the processes, the expertise, the knowledge that sits within the retailer today is a crucial part of being able to operate in a dealer space?
Yeah, I mean, I think the situation when we talk about the agency model is that fundamentally, Will it work, won't it work is always the question that I'm always asked. And I suppose the issue that we need to look at is, some have gone down that route, very few have gone down that route at the moment. Others will go down that route. We know those ones that will go down that route. And then, of course, there'll always be those that either choose not to, can't do, or don't want to do, move down the agency route because it's just not for them. They feel it's not for their customer, it's not for their IT expenditure, it's not for their investment, which is a substantial amount of investment involved in this. Will the agency rule out? Well, that's also a $64 million question. What I would say is, if it is successful for those that are trying it now, and others see it be successful, and the whole issue of successful is, does it make more money for the manufacturer? Then I think others will follow. But that will be not a great gushing tidal wave. It's going to be more like a trickle and follow.
I mean, some of the pivotal changes for manufacturers' adoption to an agency sales model, this entails the manufacturer setting national pricing, so that fixed pricing. Discount and incentives can still apply, but it is a single price across their dealer network to all consumers, all buyers. Second to that is obviously that managing customer relationship, closer to the customer, closer to that customer management and relationship. But actually added to this is that control of inventory, consignment stock, demos, courtesy cars, display cars, etc. This is a fundamental shift for those manufacturers, OEMs, moving to the agency model.
Yeah, without a doubt. I mean, I suppose probably one of the biggest ones you quite rightly highlight is going to be the stock. And the big question around the stock is, where is that stock? Where do I store that stock? Am I able to store it at the dealer anymore? Because theoretically it's not their stock, so it's now on somebody else's site. What's the cost of storing that? So the working capital aspect of the cost would have been on the dealer's balance sheet with their stock sitting there. It's now sitting at the national sales company or the OEM. So the scenario with that is that's going to be significantly complex to get the stock in the right place at the right time with the right level of cost. And of course, that's going to affect the gearing of the national sales companies.
I mean, fundamentally, the questions at the minute that are being raised across the dealer market, those either that have gone into early adoption of agency, those that are with OEMs that are shifting towards agency is, particularly around dealers' margin retention. They're losing that margin control. They are relying on the commission as an agent from the OEM. And secondly to that long-term implications of what does this agency model look like for the future, because a lot of these retailers have invested very heavily in the showrooms, the technicians, the aftermarket, etc. I mean, how is this now starting in the early days of this starting to play out?
So a lot of it still remains early days, but of course you're quite right. They've invested, the dealers have invested in some cases many millions and millions of pounds in what are very large facilities. And of course now it's more of a handover over plus commission type scenario than it is actually a sales process. So we need to be mindful that there's changes across all of it, i.e., for example, are the current dealerships too big for what they need to do? Question mark. Therefore, costs are too high, and potentially costs could come down in that aspect. The other is type of staff. If you're no longer selling something, you might need more like a brand guru in there instead of a salesperson. So there is a lot of change to take place from this and going forward for the dealer. The dealer's got it's got a lot to adapt to actually.
I mean, we kind of agree that the agency model will be, the dominant contractual agreement now going forward, particularly in the UK and Europe. This is going to have that. We know that some manufacturers won't go yet. Some may not go at all. Some may go a little bit later. But the way it is looking, and experts believe that agency model or a form of agency model will become the dominant contractual agreement in the future. For dealers adapting to this now, is this where do you think, we talk about they need to start to think about broadening their consumer offerings?
Correct.
Whether that is into the subscription space, whether that's into the aftermarket, whether that's into finance, etc. I mean, we talk a lot about finance, we talk a lot about car sharing subscription, but the aftermarket is a key revenue opportunity for dealers.
Yeah, it is without a doubt, and I think there's another point there as well. So not only the aftermarket, which it's got great gross margins, 60, 70% gross margins on those. So that's where you're going to gain your gross profitability, and the profitability of your business is what you need. The second point is around used vehicles. Again, that's another opportunity that dealers should be involved in and should be heavily focusing on the used vehicles if the scenario is that the margins for new vehicles are on the decline, which they may or may not be depending on the type of brand you're dealing with. So the scenario is really carefully, you have to pick and have to develop that strategy in such a way that you can therefore, develop and evolve, because that's what it'll be. The agency model will not be a big bang necessarily. It'll be an evolution, as the franchise model was an evolution over time, and you'll have to evolve with that as time goes on to maximise the level of opportunity and profitability for the business. Now, the other thing that could also take place as well is further consolidation in the market as another aspect. So that also needs to be considered when looking at these things. Do we have potentially, just bigger dealerships, not the actual facilities, but bigger investment groups in dealerships, which is what we're seeing.
I mean, so clearly we know that the dealers are facing what we would describe as profound changes in their role due to agency model or a type of agency model, and that alongside other industry shifts of how they've got to adapt, change, and change their behaviours. But one impact or one change that we touched on right at the start of this was that the manufacturer takes on the risk and the responsibility of the new vehicle stock. How does this then change for the dealer of how they can start to influence their strategies from a financial perspective? Now they haven't necessarily got the financial burden of the cost of a lot of the marketing spend and the cost of consignment stock, new vehicle stock, display stock, etc.
Yeah, so the way we would look at it probably at Grant Thornton is the following way. You'd want to take your strategy, analyse that strategy with a great amount of detail. You're now in that situation where your working capital is now potentially significantly lower because you don't have the consignment stock. However, that doesn't say you haven't got the opportunity to, say, increase your stocking levels in the way of used vehicles. So you could turn it, to your advantage because you've also got spare space on the site as well. So the opportunity there is to take your strategy going forward, work it out. We were talking to a motor retailer, and they say, well, what do we budget for next year? Well, what do you budget for next year? But also as well, what do you budget for the years after that? Because it is structurally a change that you need to build into your business model. And that business model is key to how your cash flow flows in your business and your profitability. So you've got to get it right.
I mean, this is it. We're talking in the report about the dealers needing to adapt and align with some of the manufacturers of how their strategies fit for the future in whatever that looks like, whether that is under the franchise agreement, hybrid, or a full agency agreement, because they are part of that future. Correct. And they need to start to think about their strategies. It's clearly there is a financial reduction under the agency for the retailer potentially, and this then, as you say there, this then gives the retailers the opportunity to explore alternative revenues for that potential opportunity of further expenditure.
You mentioned those. You've got things like subscription, car share, rental would be another one, which some of the brands are doing. That is not just demanded by the agency model. It's demanded by the consumer as well. The consumer is also looking for additional choice.
And I mean, finally, we talk about preparing dealers for the future. We talk about agency model, the uncertainty that brings for the marketplace. But we've also got new entrants coming in from various markets, China being probably the most dominant new entrant to the UK market. How does this start to change how the retailers, the dealers need to think about how they start to adapt? Because some of the new agents, some of the new entrants into the UK and into Europe, we're talking there about agency model, but actually some of the new Chinese entrants are coming straight in as NSCs. They're coming under that previous NSC partnership agreement of how they want the dealer network. They would need their expertise. They need their route to market. They need their understanding of the consumer space. And they're just there as a supplier of product to it.
Correct.
How have the dealers got to sort of think about how they change their business model and their strategies around that?
Well, I suppose they need to think really carefully whether they want to get into bed with the likes of the Chinese. That would be point number one. Clearly there's circa 100 plus MG operators out there that are dealers. So, somebody like MG has been going down that route for many, many years. Other more newer Chinese operators in the UK, again, they've like Great Wall has gone down that route as well. But we believe there'll probably be some that won't go down that route. We're seeing that with the Geely Group, for example, as a classic example. They're going down more the agency model. So I think it's going to be really varied. And the big decision that dealers need to make is, which ones do they choose and which ones don't they choose? And that's really only one way to determine that, and that is to determine what is your gross margin attained from that particular brand. And at that particular point, what profitability does that make for me? And is it cash positive for me to invest in the requirement that I need, whatever that may be, to fulfill their standards?
So I think what we're talking about in the report is that we've got to be very careful, because some of these new entrances in the early days of entering the markets, whatever market that is, whether it's UK, Europe, or some of the international US markets, they in the short term need the retailer.
Correct.
But that could significantly change in the future. As they become more of a recognised brand in the consumer market, they could start to switch to more of an agency or hybrid agency marketplace. So, we've seen that previously with OEMs that have entered the UK market and European market that
you're right.
have been quite happy with bolting on to the end of an existing franchise. But soon they want a standalone showroom. Soon they want significant investment into the showroom standards. That starts to shift as we move forward.
That does without a doubt. What I would say is that you have to remember whether it be a Chinese new entrance or an American new entrance or even a Vietnamese new entrance, what they don't have the legacy. They don't have the legacy of the dealerships. So yes, they can bring those dealerships on. They could take the opportunity to work with maybe fewer, possibly, don't know. Or it could be a situation they can roll that out and then roll it back, because they don't have that legacy that maybe some of the what we call the legacy OEMs have. So I think there's a lot more flexibility around the Chinese brands, and move with caution, because at the end of the day, we have seen some Chinese brands in China, not in the UK, not the ones that are based in the UK or Europe, go into insolvency. So need to be really careful on what you're picking and what you're selecting, and how you see that strategy going forward, and the comfort that you see with those OEMs.
So I think what we're saying is, if you're a retailer at the minute, you need to be open to opportunities.
Correct.
You need to have take a look at your strategy, be open to explore various opportunities, financially or non-financially,
Correct.
through partnerships, or and start to adapt, because there's a lot happening in the future of the landscape now for the automotive sector. So they've got to be flexible, and they've got to be prepared to adapt, is what we seem to be saying.
Correct.
Thanks, Owen. I mean, we've tried covering a lot there. There's a lot for the retailers to think about for the future landscape of the automotive retail sector. So thanks for doing that. And please do, if you want to read the full detail in the report, please do check out the Cox Automotive website. Thank you for joining us in the first of the series of the podcasts. The next series will be discussing making sustainability more sustainable.